Imagine the hum of massive assembly lines suddenly falling silent, conveyor belts grinding to a halt under the harsh glare of emergency lights. Workers standing idle as multi-million-dollar machines collect dust in the shadows of sprawling industrial complexes. From Silicon Valley to Shenzhen, this isn't a scene from a dystopian thriller. It's the stark reality barreling toward us in the global manufacturing heartlands, where a critical shortage of one unassuming metal, silver, is poised to unleash chaos on an unprecedented scale. As the world hurtles into an era defined by renewable energy, revolutions, and technological leaps, factories worldwide are teetering on the brink of blackout, their production lines starved of the very element that powers everything from solar panels to electric vehicles. And as these shutdowns ripple through supply chains, igniting a frenzy of desperation among industrial giants, the price of silver isn't just climbing, it's about to erupt into an inferno that could redefine wealth, reshape economies, and reward those who see the warning signs before it's too late. Welcome to the edge of the abyss, where the quiet crisis in silver supply is no longer a whisper in financial circles, but a thunderous alarm echoing across boardrooms and trading floors alike. To grasp the magnitude of this impending industrial blackout, we must first journey into the underbelly of the silver market, a realm where geological truths collide with human ambition, and where the seeds of today's turmoil were sown decades ago in the depths of the earth. Silver, often overshadowed by its flashier cousin gold, has long been the workhorse of modern industry. Embedded in the circuitry of our smartphones, the photovoltaic cells of solar farms stretching across deserts, and the conductive layers of batteries propelling the electric vehicle boom. Yet, unlike gold, which basks in the glow of investment portfolios, silver's fate is inextricably tied to industrial demand, a voracious appetite that has grown exponentially as the world pivots toward a green future. In 2025, as nations race to meet ambitious net zero targets, the demand for silver in solar applications alone is projected to surge by double digits, with the automotive sector fueled by the relentless expansion of electric vehicles, consuming millions of ounces, more than ever before. But here's the cruel irony. While demand skyrockets, supply is crumbling under the weight of exhausted mines, regulatory hurdles, and a chronic underinvestment that has left the industry gasping for breath. Reports from the Silver Institute's World Silver Survey paint a grim picture, forecasting another year of structural deficits, with global mine production barely inching up by a meager 2% to around 944 million ounces, even as recycling efforts scramble to fill the void but fall woefully short. This isn't mere market fluctuation. It's a fundamental dislocation, where the Earth's finite resources are being outpaced by humanity's insatiable hunger for progress, setting the stage for factory floors to go dark and prices to ignite like never before. Picture the scene in a bustling solar panel factory in China's Jiangsu province, where rows of robotic arms meticulously layer silver paste onto silicon wafers, each application a critical step in harnessing the sun's power for a cleaner tomorrow. These facilities, humming with the promise of sustainable energy, are now facing an existential threat as silver inventories dwindle to critical lows, forcing production managers to ration supplies and contemplate the unthinkable partial shutdowns that could halt the output of millions of panels destined for rooftops across Europe and North America. This isn't speculation. It's already unfolding in pockets of the industry, with whispers from supply chain insiders revealing that refineries in Peru and Mexico, key arteries in the global silver pipeline, have been plagued by operational halts due to labor strikes, energy shortages, and declining ore grades that make extraction increasingly uneconomical. In Peru, the world's second largest silver producer, mines like Antamina and Cerro Verde are grappling with output reductions amid environmental protests and water scarcity issues, exacerbated by climate change issues that have slashed production, forecasts, and sent shockwaves through downstream manufacturers. Meanwhile, in Mexico, where silver mining has been a cornerstone of the economy for centuries, the gradual closure of aging operations such as the San Julian mine is compounding the crisis. With reserves depleting faster than new discoveries can replenish them, these disruptions aren't isolated incidents. They're symptomatic of a broader collapse in primary silver supply, where chronic underinvestment over the past decade, driven by volatile prices and shifting investor priorities, has left the industry without the buffer needed to weather the storm of surging demand. As these mines falter, the refineries that process raw ore into usable industrial silver are bottlenecking, creating a domino effect that threatens to idle factories from Tesla's gigafactories in the United States to Samsung's electronics plants in South Korea, where even a week's delay in silver deliveries could translate to billions in lost revenue and stalled innovation. But to truly understand why these factory shutdowns are inevitable and how they'll fuel a silver price inferno, we need to delve into the historical echoes that resonate through today's market. Patterns of scarcity and surge that have played out before, but never on this scale in our hyper-connected, Tech-dependent world, cast your mind back to the late 1970s, when the Hunt brothers' infamous attempt to corner the silver market sent prices skyrocketing from under $6 an ounce to over $50 in a matter of months, only for regulatory interventions to trigger a crash that reverberated for years. That era was marked by geopolitical tensions, inflation fears, and a budding industrial demand, but it pales in comparison to the perfect storm brewing in 2025, where industrial consumption now accounts for over half of global silver use, dwarfing the investment plays of yesteryear. Unlike the speculative bubble of the 1980s, today's rally is underpinned by tangible shortages, with the U.S. Geological Survey reporting persistent declines in ore grades at major mines, meaning miners must process ever larger volumes of rock to yield the same amount of silver, driving up costs and squeezing margins to the breaking point. Fast forward to the early 2010s, when silver briefly touched $49 amid post-financial crisis recovery and emerging green tech demands, only to retreat as supply chains adapted, but those adaptations relied on stockpiles that have since been depleted, leaving no safety net for the current crunch. Now, in December 2025, with silver trading at around $64 per ounce, a staggering 111% increase year to date, the market is flashing red alerts, as evidenced by lease rates spiking to levels not seen since the 2011 peak, signaling acute physical shortages that refiners are desperately trying to bridge through borrowing. These historical parallels serve as a cautionary tale, reminding us that when supply chains fracture under pressure, industrial users don't just adapt, they panic, bidding up prices in a frantic scramble to secure whatever metal remains, turning factories. Desperation into a propellant for explosive price gains that could push silver toward the $100 mark by mid-2026, as strategists from major banks like JPMorgan and Citigroup are beginning to forecast amid unrelenting deficits, estimated at over 200 million ounces this year alone. As we peel back the layers of this crisis, the emotional toll on those caught in the crossfire becomes palpably clear. From the miners toiling in precarious conditions deep underground, to the factory workers facing layoffs as production lines stutter to a stop. In the high-altitude Andean mines of Bolivia, where silver has been extracted since colonial times, communities built around operations like the Porco mine are bracing for closure, with families who have depended on mining wages for generations now staring down economic ruin as output dwindles and jobs evaporate. These aren't abstract statistics. They're human stories of resilience and heartbreak, where fathers teach sons the art of underground navigation only to see their livelihoods eroded by global forces beyond their control, declining grades, rising energy costs fueled by geopolitical conflicts in oil-producing regions, and environmental regulations that, while necessary for planetary health, add layers of complexity to an already strained industry. Transitioning to the factory floors, envision the anxiety rippling through teams at First Solar's manufacturing hubs in Ohio, where engineers pore over spreadsheets late into the night, calculating how many days' worth of silver paste remains before they must throttle back assembly lines, potentially delaying shipments to utility scale, projects that promise clean energy for millions. This tension isn't confined to boardrooms. It seeps into homes where workers worry about mortgages and school fees, their futures hanging on the fragile thread of global supply chains, disrupted by everything from typhoons in the Pacific, affecting shipping routes to trade, tariffs imposed in a renewed era of protectionism. Yet, amid this uncertainty, there's an undercurrent of opportunity, a silver lining, if you will, for those attuned to the market's rhythms, investors, and sovereign funds who recognize that these shutdowns aren't just disruptions, but catalysts for a paradigm shift, where silver's scarcity elevates it from industrial staple to strategic asset, driving prices into stratospheric territory and rewarding the prescient with fortunes forged in the fires of necessity. Building on this human dimension, let's zoom out to the macroeconomic forces amplifying the blackout alert, where global trends in energy, transition, and technological advancement are supercharging silver's indispensability while exposing the fragility of its supply. The push for net zero emissions, championed by policies like the U.S. Inflation Reduction Act and Europe's Green Deal, has turbocharged demand for solar photovoltaic installations, which consume vast quantities of silver, each gigawatt of capacity requiring upwards of 20 tons of the metal for efficient conductivity. In 2025, as installations are forecasted to exceed 500 gigawatts globally, this translates to an additional 10,000 tons of silver vanishing into panels that will power homes and grids for decades, metal that's effectively locked away from recirculation. Compounding this, the electric vehicle sector, led by behemoths like Tesla and BYD, is integrating silver into everything from battery management systems to charging infrastructure, with projections from the Silver Institute indicating automotive demand could climb to 94 million ounces by 2031, a compound annual growth rate that outstrips even the most optimistic supply expansions. But as these sectors boom, mining output stagnates, hampered by a decade of underinvestment where capital flowed to flashier commodities, like lithium and cobalt, leaving silver producers with aging infrastructure and insufficient exploration budgets. Energy costs, spiked by ongoing conflicts in Ukraine and the Middle East, further erode profitability, forcing marginal mines to shutter and reducing global output projections, with analysts from Metals Focus warning of a 0.9% compound annual decline through 2030 as closures in Mexico, China, and Chile bite hard. This mismatch isn't just economic arithmetic. It's a ticking time bomb where factories, unable to secure silver at any price, face forced downtime, triggering a cascade of supply chain failures that could shave points off global GDP and inflame inflationary pressures already simmering from post-pandemic recoveries. Now, as suspense builds around the inevitability of these shutdowns, consider the shadowy maneuvers of market players desperate to avert or exploit the chaos. From bullion banks juggling lease rates to industrial hedgers locking in futures at premiums that scream scarcity. In the vaults of London and New York, where the London Bullion Market Association oversees the flow of physical silver, inventories have plummeted to multi-year lows, with registered stocks dipping below 200 million ounces, a fraction of annual industrial needs prompting frantic calls between traders and refiners to source metal from wherever it can be found, even if it means raiding recycling streams or diverting from jewelry markets. This desperation manifests in lease rates soaring above 5%, a financial distress signal that echoes the 2011 squeeze, where similar pressures preceded a 30% price drop only after manipulative interventions. But this time, with physical demand unyielding, the outcome promises to be far more bullish. Sovereign actors, too, enter the fray, with nations like India and China voracious, consumers of silver for both industry and investment, stockpiling, through state-backed entities, viewing the metal not just as a commodity, but as a hedge against dollar dominance and geopolitical volatility. India's silver imports have ballooned by over 50% this year, driven by solar ambitions and cultural affinity, while China's strategic reserves swell amid trade tensions, creating a global tug-of-war that leaves Western manufacturers scrambling. These dynamics foster an environment ripe for volatility, where a single announcement of a major factory slowdown, say a Samsung plant idling its semiconductor lines due to silver paste shortages, could spark a buying frenzy, pushing prices through resistance levels at $70 and beyond, as algorithms and human traders alike pile in, sensing the Inferno's first sparks. Escalating this narrative to its emotional zenith, we confront the raw fear and exhilaration pulsing through the veins of those invested in silver's fate, a dichotomy that mirrors the metal's dual role as industrial necessity and monetary refuge. For the small-scale investor, perhaps a middle-class family in the suburbs of Chicago, who dipped into physical silver coins during the inflationary spikes of 2022, today's market evokes a thrilling vindication. Their modest stacks appreciating over 100% as headlines blare warnings of industrial Armageddon, transforming basement safes into fortresses of foresight. Yet, this triumph is tempered by the broader societal anguish as factory shutdowns threaten to exacerbate inequality, with blue-collar workers in Rust Belt towns bearing the brunt of halted production, while tech elites pivot to alternatives that may not yet exist. In the UK, where solar adoption lags but electronics manufacturing persists, companies like those in the Midlands face similar perils. Their reliance on imported silver exposing vulnerabilities in post-Brexit supply chains, stirring national debates on resource security that echo the oil shocks of the 1970s. This emotional roller coaster peaks in moments of collective realization, such as when a viral report from Kitco News details halted refineries in Australia, sending silver futures gapping up overnight and igniting. FOMO, fear of missing out, among retail traders on platforms like Reddit's Wall Street Silver, where communities rally with memes and manifestos, channeling the spirit of the 2021 squeeze, but with stakes amplified by real-world industrial fallout. It's a visceral reminder that markets aren't just charts and numbers. They're battlegrounds of hope and despair, where the blackout alert isn't merely economic, but profoundly human, testing our resilience in the face of scarcity. As we approach the climax of this unfolding drama, the evidence mounts that these factory shutdowns aren't distant hypotheticals, but imminent realities, with early indicators already flashing across the industrial landscape like storm clouds gathering force. In the solar sector, companies like LONGi Green Energy Technology have issued veiled warnings in earnings, calls about potential production adjustments due to raw material constraints, while Tesla's supply chain reports hint at delays in battery component sourcing that could ripple into vehicle delivery shortfalls. These are the harbingers of the Inferno, where a chain reaction of shutdowns, starting with peripheral suppliers, and escalating to core manufacturers creates a feedback loop of panic buying, further depleting available silver and accelerating price surges. Analysts from S&P Global and Fast Markets project that if even 10% of global solar capacity idles for a month, the resultant demand destruction would be overshadowed by the hoarding frenzy it triggers, potentially adding $20 to $30 per ounce in a matter of weeks. This climax isn't a gentle peak, but a volcanic eruption, where the interplay of supply crunches and demand inelasticity shatters previous highs, with silver's outperformance over gold already at ratios not seen in decades, signaling a new era where industrial metals command premium valuations. The banks, once manipulators of paper markets, now find themselves outgunned by physical realities. Their attempts to cap prices through futures dumping rendered futile as sovereign buyers and industrial whales absorb every dip, turning attempted suppressions into launch pads for higher orbits. And the satisfying resolution of this narrative, as the dust settles from the initial waves of shutdowns, a new equilibrium emerges, one where silver's scarcity forges a path to innovation and reevaluation, rewarding the steadfast while punishing the complacent. For holders of physical silver, whether in bars stacked in secure vaults or ETFs tracking the metal's ascent, this inferno represents not destruction but purification, a market cleanse that elevates prices to sustainable levels reflective of true value, perhaps stabilizing around $80 to $100 by year's end, as forecasted by optimistic strategists amid persistent deficits. This isn't blind optimism. It's grounded in the resilience of human ingenuity, where shortages spur advancements, like silver-efficient solar cells or enhanced recycling technologies that could eventually alleviate pressures. But not before the price adjustment delivers windfalls to early adopters. To the US and UK audiences navigating this turbulence, the message is clear: don't succumb to the fear-mongering of short-term dips. Instead, view these blackouts as the market's way of screaming opportunity, a call to secure positions in an asset that's not just surviving but thriving in the chaos. As factories flicker back to life with hard-won supplies, the world will emerge wiser, with silver enshrined as the indispensable bridge to a sustainable future, its price inferno a testament to the unyielding laws of supply and demand. So, as we close this chapter on the brink of transformation, remember, in the forge of scarcity, fortunes are made, and those who heed the blackout alert today will illuminate their tomorrows with the gleam of silver's enduring shine. And thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.